Assalamualaikum. My name is Ratu Munira binti Abdul Jalil. I will explain about management session for payment and acquisition cycle. The first one is accuracy. Audit objective. Ensure purchase and payment transaction are recorded, actually occur, and related to the entity. It also prevent unauthorized transaction. Class of transaction. The first one is purchase of goods and services, and the second one is cash and bank payment to the supplier. The third item is relevant account or ledger. The first one is purchase account, cash at bank, trade payable, inventory, and also general ledger. For internal control, purchase are only made with approved purchase order, we call PO. And then that, segregation of duty. In segregation of duty has 4 items, which is ordering, receiving, recording, and payment. The third one is payment made only for authorized supplier invoice. And the last one, supplier invoice matched with purchase order and good receipt note, or we call GRN. For audit procedure, they have 2 tests, which is test of control and substantive test. For test of control, to check whether control are working, inspect whether purchase order are authorized, invoice are matched to PO and GRN, observe approval procedure for payment from start until payment happen, review evidence of segregation of duty, such as receiving reused delivery order. For substantive test, to verify actual transaction, select recorded purchase transaction and vouch to supplier invoice, trace to PO and GRN, inspect bank payment to confirm payment to valid supplier, confirm selected supplier balance. We use supplier confirmation, or we call statement of account, SO. Next is audit evidence. Audit evidence include purchase order, receipt note, invoice, and bank statement. Last one is possible misstatement that may happen. Fictitious purchase, which is dummy purchase, duplicate payment, and the third one, payment made to non-existent supplier, and the last one is personal expenses record as company purchase. The second management session is completeness. Audit objective for completeness is ensure all purchase and expenses incurred are recorded, and liability at year end are included and not understated. For class of transaction included purchase of goods and services, accrued expenses, and trade payable. Next, relevant account or ledger included purchase account, trade payable, accrued expenses, inventory, and general ledger. Internal control for completeness. All GRNs are sequentially numbered. All supplier invoices are recorded promptly. Regular reconciliation between supplier statement and payable ledger. Follow a cut-off procedure. For example, account must close on 7 January 2026. So, all transactions in December need to record before 7 January 2026 so that account will close smooth. While for audit procedure, they have 2 tests, which is test of control and substantive test. For test of control, check if any GRN missing, review reconciliation of supplier statement to payable ledger, inspect procedure for invoice received late. For substantive test, trace GRN and supplier invoice to accounting record, perform search for unrecorded liability, review post-year end payment, inspect if that any GRN not matched at year end, and the last one, compare supplier statement to account balance recorded. Audit evidence included good receipt note, invoice, supplier statement, post-year end payment record, and payable ledger. Possible misstatement that may happen, purchase not recorded, liability understated, and cut-off error.
Hi, Assalamualaikum. My name is Farah Hidayah binti Fuan, student ID 2023548559. Today, I will be explaining two management assertion, namely accuracy and cut-off, and how these assertions are addressed during the audit. For the accuracy assertion, our main audit objective is to ensure that all transactions are recorded at the correct amounts and are properly calculated before being posted into the accounting system. This assertion mainly applies to revenue and expense transactions recorded throughout the financial year. The key accounts involved include revenue, operating expenses, and the general ledger, together with any related subsidiary ledger. In terms of internal control, management has established procedures such as review and approval of invoices and journal entry, as well as relying on system-generated calculation for totals, discount, and taxes. To test the effectiveness of this control, we inspect evidence of management review and test automatic calculation controls within the system. From a substantive perspective, we perform detailed testing by watching recorded transactions to supporting documents such as invoices and contracts, and we independently re-perform calculation to verify accuracy. The audit evidence obtained includes approved invoices, contractual agreement, and our recalculation working. Last is possible misstatement relating to accuracy include overstatement or understatement of revenue or expenses due to calculation errors, incorrect pricing, or posting errors in the accounting records. Next, for the cut-off assertion, the audit objective is to ensure that transactions are recorded in the correct accounting period, particularly around the financial year end. This assertion is especially relevant for revenue, purchases, and inventory transactions that occur close to the reporting date. The related accounts include revenue, trade payables, inventory, and accrued expenses. Management internal controls over cut-off include clearly defined period and procedure, policies on revenue and expense recognition, and review of transactions recorded near year-end. We test this control by reviewing management's cut-off procedure and inspecting approval of year-end journal entries. Substantively, we perform cut-off testing by selecting transactions recorded immediately before and after year-end and tracing them to supporting documents such as sales invoices, delivery notes, and goods received note. The audit evidence obtained includes invoices, delivery notes, GRNs, and shipping document. Last is possible misstatement for cut-off assertion, include revenue being recognized prematurely or expenses being deferred or recorded in the wrong period, which could result in a material misstatement of profit.
Hi, my name is Irene Fadila binti Azwa and my matrix number is 2024390685. I will explain the assertion classifications under the payment and revenue cycle. The assertion of classifications ensures that all purchase and payments transactions are recorded in the correct accounts such as expenses, inventory, assets, or liabilities. The objective of the audit for classification is to ensure that transactions are classified correctly and that no misclassification has occurred that could affect the financial statements. Okay, next, the classes of transactions involved includes purchase of goods, purchase of service, operating expenses, acquisition of assets, and payments to suppliers. Alright, the relevance account relevant to these assertions are purchase, operating expenses, inventory, property, plant and equipment, account payable, cash, and the general ledger. To ensure proper classification, management implements internal control such as clear charts of account, approval of account coding, segregation of duties, and supervisory review. In terms of audit procedures, the auditor performs tests of control by reviewing invoice and checking management approval on account coding. Substantive tests are also conducted by examining invoice, tracing them to the general ledger, and reviewing unusual transactions. The audit evidence obtained includes supplier invoice, purchase order, journal entry, and general ledger records. Then, for possible misstatements related to classification, include expenses being capitalized as assets, capital expenditures recorded as expenses, and inventory purchase recorded incorrectly. Next, I will explain the rights and obligations assertions. These assertions ensures that all recorded liabilities are valid obligations of the company and that the company has rights over the assets acquired. The audit objective is to ensure that account payables and accrued liabilities represent genuine obligation of the company. The relevant transactions include credit purchase, recognitions of account payables, supplier payments, and accrued expenses, while the related accounts includes account payables, trade creditors, accrued expenses, purchases, cash, and the general ledger. Okay, for management safeguards, these assertions through internal control such as supplier approval, three-way matching, contract approval, and proper maintenance of supplier records. The auditors performs tests of controls by reviewing supplier approval processes and verifying the implementations of three-way matchings, while the substantive tests include supplier confirmation, inspection of contracts, reconciliation of supplier statements, and searching of unrecorded liabilities. Audit evidence includes supplier confirmations, contracts, supplier statements, invoices, and accounts payables aging reports. Okay, for possible misstatements includes unrecorded liabilities, recording liabilities that do not belong to the company, and fictitious suppliers.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Nufahana Abdurrahman with ID number 2023-978741. So, in my part, I will explain about the past year question as our group choose February 2023 question 5s. Okay. So, in the case study in question 5, the first question asks about 5 weaknesses and 5 possible effects. So, the first weakness in the case study is supplier selection based on purchasing clerk's experience. It is because supplier selection is done by the purchasing clerk based on personal experience without formal approval or objective criteria. The possible effect for this weakness is risk of favoritism or kickbacks. Purchases may be made at higher prices, poor quality suppliers selected, increased risk of fraud, company may not obtain best value for money. The second weakness is purchasing manager approval only required for new suppliers. The explanation is orders from existing suppliers do not require verification by the purchasing manager. The possible effects for the second weakness are unauthorized purchase may occur, risk of over-ordering of unnecessary purchases, increased chances of fraud or errors, weak management oversight, and higher operating costs. The third weakness for the case study is receiving report prepared using purchase order. It is because the warehouse assistant uses the purchase order when preparing the receiving report. The possible effect for the third weakness are receiving report may not reflect actual goods received. Errors or shortage may go undetected. Risk of recording goods not actually received. Inventory records may be overstated, and also weak control over existence of inventory. The fourth weakness is accounts clerk prepares checks and bank reconciliation. It is because in the case study it stated that the same accounts clerk prepares checks and also perform bank reconciliation. The possible effect for this situation are lack of segregation of duties, increased risk of appropriation of cash, fraud may not be detected timely, possibility of check manipulation. The last one is weak internal control over cash disbursement. The last weakness for this question are no mention of three-way matching. It doesn't state that they apply the three-way matching system. So the possible effect for this situation is payments may be made for incorrect quantities or prices, risk of paying for goods not received, duplicate or fictitious invoices may be paid, errors in accounts payable, financial statements may be misstated. So the second question for this case study is 3 ways to improve the purchasing system. So we have 3 improvements that we suggest in this past year question. The first improvement is implement proper supplier approval procedures. It is to establish formal supplier selection criteria, require purchasing manager approval for all suppliers, not only new ones, maintain an approved supplier list. The second improvement we can make in this case study is strengthen segregation of duties. Separate responsibilities for preparing checks, authorizing payments, performing bank reconciliation instead of using the same PIC for each work. The second, bank reconciliation should be done by an independent person. The third improvement is enforce three-way matching before payment. As it doesn't mention in the case study that they use the three-way matching method, so we need to improve in that case to match purchase order, receiving report, and supplier invoice before issuing payment, and ensure receiving report is prepared without reference to purchase order quantities. So that's all from me. Thank you.